Hey, what's going on out there? I would like to welcome you all to Water Your Soil. So before I get into this video, I would like to say, if you're new here, I have two rules over here on this channel. The first rule is for you to always use your own discretion when it comes to credit cards and credit scores. The second rule, that's for you to verify everything that you learn, whether it's here on this channel, another channel, or anywhere. That should be a rule to life. So getting into the video. This video is going to be about a new interesting article, and this article relates to millions of people. But before I get into the news and the article, I'm going to share a story with you all. So it goes back to the start of my credit journey, and actually the things that helped start my credit card journey and my journey towards trying to achieve good credit. So this is back in 2014, the end of 2014, like around November, December. And those of you who've been watching this channel and subscribed to this channel for a while, you've more than likely watched the video where I told my story how I went from poor credit to excellent credit to the 800s. If you haven't saw that story is on the homepage of this channel. It's under the playlist of my credit journey. So go check that out after this video. In that video, I explained how I went from poor credit to excellent credit. And I also explained how that journey was sparked by me needing a new car. So I remember back then when I was in the hunt for a new car, I wanted a brand new car. I didn't just want a used car. I had a used car, and the decision was to get a new motor on the used car that I had or get a new car, because my job at that time consisted of doing a lot of driving. I mean heavy driving. And no, it wasn't Uber or Lyft back then, because I'm not even sure those things existed back then. Maybe they did, but they were nowhere near as popular as they are now. But my job required me to do a lot of driving. So I was in the market for a new car. So what I was doing is I was going to dealerships, and I was getting rejected when I would apply for a new or used car, because of course my credit was poor. And at that point I just started a new job, so I was in this pretty tough spot. But I basically ran out of options, and then I went to drive time. And I don't know if you have a drive time in your city, but where I live, we have a drive time. And in my opinion, drive time is similar to a buy here, pay here. They may be one, I'm not sure, but they're similar because of the way how they set up payments. And according to them, they'll help you build up your credit score while making your payments on time, of course. Now, this story actually relates to a lot of what the news is going to be about in this video, but I'm going to continue on with the story because I know a lot of you can relate to this, whether you can relate right now in the present or previously in your lifetime. So I went to them, and for context, this is back in 2014. So the prices were different than what they were now. So don't just say, oh my God, that's a low price, you should have hopped on it. The prices were totally different. So they offered me a 2010 Ford Focus. And the way how their payments were set up back then, I don't know how they're set up now, but back then they wanted me to pay $254 every 2 weeks. That's what they were offering for the car. And I was like, $254 every 2 weeks, that's more than $500 a month for a 2010 Ford Focus. Now back then, the 2010 Ford Focus should have been nowhere near more than $500 a month, but that's what they were offering me, and I had to pay every 2 weeks. That was going to be my payment plan. And I'll be honest, I sat there and I thought about it for a couple of minutes, and I walked away. I, number one, was not a fan of making car payments every 2 weeks. And number two, I felt like they were overpricing me. You're charging me more than $500 a month for a car that's nowhere near worth what you're charging me, and it's a 2010. Mind you, this was 2014, so the car was a couple of years older, of course, but I wasn't a fan of what they were offering, so I left the deal on the table. I left and I never went back. So to add in context to that story, as I always told you all, I ended up going to another dealership that was referred to me by a coworker. And that dealership wasn't a dealership like Drive Time or Buy Here, Pay Here. So they were able to get me into a car that was only 1 year old. It didn't have many miles on it. And my payments on it were only going to be $316 a month. That's $158 every 2 weeks compared to that $250 something every 2 weeks. So that's a big difference. And the car was newer. I ended up having that car for a couple of weeks and had to return it. That's the story. And that sparked my credit score journey. And during my credit score journey, I stumbled across my credit card journey, and they both worked together simultaneously because I ended up getting a secured card, and I ended up learning more about credit scores and how credit cards work, and the rest was history. But I I know a lot of you out there can relate to this because there are some of you out there, maybe you deal with payday loans, maybe you deal with buy here, pay here, maybe you deal with any other thing that's similar, high interest for subprime borrowers, but really, in my opinion, it's predatory. And I know people have businesses, so they have to go about making money in their business, but I am not a fan of buy here, pay here, or payday loans, and I won't be a fan of them. And that's part of the reason why I created this channel and started helping people back in 2019 with increasing and improving their credit scores, because I know what's out there. I experienced it when I had poor credit. So this video and article relates to that, and it brings the data. And this article is by PYMNTS.com. Now, the way how credit score news works around here is I'll read through the article. I always leave the link to the article in the description box. That way you all can give it a read yourself. And I encourage you all to give it a read after you watch this video, all right? So we're going to get right into it. As I stated, it's by PYMNTS.com, and it was posted on May 20th, 2025. 25% of subprime consumers use credit for non-essentials to improve credit scores. It says, contrary to perceptions of financial irresponsibility, a significant portion of subprime borrowers actively and strategically use credit to improve their financial standing, revealing an underserved market segment with a strong desire for traditional financial inclusion. It's one of the insights drawn from the recent payments report, quote unquote, high credit card denial rates force subprime borrowers to turn to alternative options. Navigating the current consumer credit environment presents considerable challenges for individuals classified as subprime borrowers, typically defined by credit scores below 620. These consumers face significant barriers to accessing conventional credit products. Traditional banks are often ill-equipped to underwrite this segment. As a result, subprime applicants encounter substantially higher denial rates for traditional products like credit cards. Specifically, bank denial rates for subprime credit card applicants are 2.3 times higher than those for superprime borrowers, with 29% of subprime consumers reporting being denied a credit card compared to just 12% of superprime consumers. This limited access to traditional financial services compels many subprime borrowers to seek alternative lending options. Subprime borrowers are increasingly turning to non-traditional avenues such as payday loans, credit builder loans, and buy now, pay later (BNPL) services to cover essential purchases and bridge cash flow gaps. They apply for loans and BNPL at higher rates than other consumers. For instance, 40% of subprime borrowers have applied for BNPL compared to 27% of superprime consumers, and they are 2.1 times more likely to have applied for a payday or credit builder loan than those with higher credit scores. While these alternatives offer accessibility, often with lower denial rates than traditional cards, example 14% for BNPL, 8.2% for payday loans for subprime applicants, they frequently carry high interest rates and fees that can further strain these borrowers. And the effectiveness of some alternate credit providers for building credit is limited, as not all report consumer behavior to the major credit bureaus. Despite these hurdles and the reliance on alternative products, obtaining traditional credit remains a crucial financial milestone for subprime borrowers. Key data points from the report underscore the dynamics at play. Denial rates for traditional credit card products are 2.3 times higher for subprime applicants compared to superprime borrowers. 1/4 of subprime consumers use credit for non-essential expenses with the specific intent of raising their credit score. Subprime borrowers are 3.6 times more likely to show interest in obtaining a new credit card than those with the highest credit scores. The findings highlight the subprime borrowers represent an undeserved market, actively seeking ways to improve their credit worthiness and integrate into the mainstream financial system. Beyond credit cards, this segment expresses greater interest in securing various types of loans, including personal loans, mortgages, and auto loans, indicating a broad aspiration for the benefits offered by traditional finance. Their interest in debt consolidation loans is also notably higher than that of high credit score consumers. This dynamic underscores a significant opportunity for financial institutions to develop more inclusive and responsible strategies to serve this segment. Products such as secured credit cards, which mitigate lender risk while providing a pathway for credit building, are identified as potential tools to help subprime borrowers achieve their goal of traditional credit access and financial stability. This analysis is based on insights from a survey of 2,330 U.S. consumers conducted in January of this year. This article was informative. Of course, these studies are usually market research conducted from a group of people that they pull and people who, of course, want to do a survey. Now, I do similar things on my channel with polls, and it's always good to get a pulse on where people are and their thoughts, because polls usually help people be honest with their thoughts sometimes, not all the time. But one thing that I'm going to pull from this article is they're basically stating that financial institutions are missing out on this segment of potential borrowers because their credit score is subprime. So the financial institutions like the major banks, they're not interested in dealing with people with subprime credit. So they'll deny them for a credit card or a loan, which is understandable, because if someone is risky, you're going to be apprehensive when it comes to letting them borrow your money. And that goes for credit cards, that goes for home loans, that goes for auto loans, that goes for personal loans, and just about anything and any product that they offer. So that's why I'm here on YouTube, and I'm always here to talk to the people who have poor credit. I don't care if you're wealthy, if you're working class, or you're middle class, or you're someone who's laid off currently, or you're someone who's living on disability, or you're retired, or you're scraping by. There is no specific group of people that has a poor credit score. It's pretty much universal all across the board when it comes to poor credit scores, because some people make mistakes. Yes, there are some wealthy people who are irresponsible with money. Is there a lot of them? No, but there are some. Yes, there are some people who make more than $100,000 a year who are bad with money and managing money, and they have high debt, which in return results in a subprime credit score, which the article highlights is below 620. Yes, it's possible. It does happen, and it is happening. I have come across people personally that this has happened to. So it's a universal problem across the board. That's why these payday loans, credit builders, and buy now, pay here continue to stay in business. They've been in business since I was a kid, since I was young, and they're going to continue to be in business because there will always be people with subprime credit scores. And the reason then varies. Sometimes it goes from they fell on hard times to other times they're just bad with managing money and bad with managing their debt. Nonetheless, I'm here to teach people how to increase their credit score and maintain a good or excellent credit score, because that's the main issue, I believe, maintaining your score. Because I believe a lot of people who do have subprime credit, at one point, they probably had a good or excellent credit score. But what they missed out on was the opportunity to maintain that good or excellent credit score. So that's why I continue to pump out these videos. That's why I continue to pump out these articles with data. And this data in returns gives people a pulse of what's going on, and it can help them understand what's going on, because it relates to all of us. All of this news that I post on this channel relates to all of us. Majority of the articles, it all comes back and it's information for all of us, and that's why I posted. And I wanted to share this article with you all because at one point in my life, more than 10 years ago, I related to what's in this article. But like I stated, after you're done watching this video, check that out. But before you do that, I want you to participate in my poll. I have a new poll on this channel on the homepage of this Water Your Soil channel. What you do is you click on my profile picture. It's going to take you to the homepage. Once you're on the homepage, you're going to look over at the top and you're going to see a section that says post. You're going to click on that post section. You'll see my latest poll as well as my previous polls. Be sure to participate in my latest and the previous polls. But if you're new here and you're feeling the vibe over here, this is Water Your Soil. Be sure to hit the subscribe button, turn on all notifications, that way you don't miss a future video because I post often. That's clicking on the bell and selecting all. Also, this goes to every single one of you, my subscribers, definitely you as well. Be sure to hit the like button. It literally takes 1 second. That's your way of letting the algorithm know you support this channel and, of course, this video. I appreciate every single one of you for taking out the time to watch this video, comment, share my videos, show love. I appreciate all of you. This is Water Your Soil, and I'm out. What's going on? This is Nell from Water Your Soil. So as someone who went from a 549 credit score all the way up to the 800s, I decided to share the same information that helped me go from poor credit to excellent credit. This book is titled Strategies to Master Credit. I put everything in this book, everything that helped me go from poor credit to excellent credit. All of the information is in this book. So I want you all to purchase this book. A lot of you have already purchased it, but it's available currently right now on Amazon.com and also MasterCreditBook.com. It's titled Strategies to Master Credit. You want this book. It has all the information needed in order for you to go from poor credit to excellent credit, or just simply maintain your good or excellent credit score. So get the book ASAP. And if you want something more in depth, you could take the course over at www.wateryoursoil.com. It's more in depth. There are actually chapters in this course, and it walks you through basically how FICO credit scores come about and how they're determined. And really, once you learn how FICO scores come about and the concept of credit scores, then you're pretty much on your way to either going from poor credit to good credit, or just maintaining a good or excellent credit score. So if you want something more in depth, I have the course over at www.wateryoursoil.com. All right.